Hello guys, welcome back to my channel. So in this video, I will be touching on or discussing on the methods of implementation strategies or strategic implementations regarding the issues on finance and accounting, research and development issues, and also the management information system issues, MIS issues. So on this video, I will be telling you guys regarding the procedures to determine the worth of a business, and also explain why projected financial statement analysis is a central strategy implementation tool. So in this video, I have separated into three groups. The first group will be explaining on how to evaluate the attractiveness of debt versus stock as a source of capital to implement strategies, which is based on the accounting and also the uh, finance issues. So the next group will be discussed on the nature and role of research and development in strategy implementation. So the next group will be telling you guys about the issues in the R&D. So the last group will be explaining on how management information system can determine the success of strategy information implementation efforts. So without further ado guys, I hope you get something from this video. So let's go to the first one.
In finance and accounting issue, it consists of acquiring needed capital, preparing financial budget, evaluating the worth of the business, and developing projected financial statement. In acquiring needed capital, it can be divided into two elements, which are equity and debt. Equity can be common stock, meanwhile debt can be either bonds or borrow from lender. Now let us move to the EPS or EBIT analysis. Basically, an earning per share or earning before interest tax analysis is most widely used method to determine whether the debt and stock is the best alternative to raise capital in implementing strategies. Usually, in this method, it will examine the impact that debt versus stock financing has on EPS or earning per share under various assumptions as to earning before interest tax. That's all for EPS or EBIT analysis.
Next, projected financial statements. Projected financial statement analysis is a technique that allows an organization to examine the expected result of strategies being implemented. This analysis can be used to forecast the impact of various implementation decisions, such as to increase promotion expenditure by 50% to support a market development strategy, or to increase research and development expenditure by 70% to support product development. Most financial institutions require at least 3 years of projected financial statement whenever a business seeks for capital. A projected income statement and balance sheet allows an organization to compute projected financial ratios under various scenarios. When compared to prior years and to industry average, financial ratios provide valuable insight into the feasibility of various strategy implementation approach. There are 6 steps in preparing projected financial analysis. First, prepare the projected income statement before the balance sheet. Start by forecasting sales as accurately as possible. Be careful not to blindly push historical percentage into the future with regard to sales increase. Be mindful of what firm did to achieve those past sales increase, which may not be appropriate for the future unless the firm takes similar action. Second step, use the percentage of sales method to project cost of goods sold and the expense items in the income statement. For example, if COGS is 70% of sales in the prior year, then use that same percentage to calculate COGS in the future year. Next, calculate the projected net income. Step 4 is subtract from the net income any dividends to be paid for the year. This remaining net income is retained earnings. Bring this retained earnings amount for that year over the balance sheet by adding it to the prior year's retained earning shown on the balance sheet. In other words, every year a firm adds its retained earnings for that particular year to its historical RE total on the balance sheet. Note that retained earnings is the first projected balance sheet item to be entered. As a result of this accounting procedure in developing projected financial statement, the RE amount on the balance sheet is usually a large number. Next, the fifth step is project the balance sheet items beginning with retained earnings and then forecasting shareholders' equity, long-term liabilities, current liabilities, total assets, fixed assets, and current assets, working from the bottom to the top of the balance sheet. Next step is use the cash account as the plug figure, which is use the cash account to make the assets total the liabilities and net worth. Then make appropriate adjustment. For example, if the cash needed to balance the statements is too small or too large, make appropriate changes to borrow more or less money than planned. If the projected cash account number is too high, a firm could reduce the cash number and concurrently reduce a liability or equity account the same amount to keep the statement in balance. Last but not least, seventh step is list commentary or remarks on the project statement. Anytime a significant change is made in an item from a prior year to the projected year, an explanation should be provided. Comments or remarks are essential because otherwise changes can be difficult to understand.
Next, we go through the financial budget. First of all, what is financial budget? Financial budget is predicting the income and expenses of the business in a long-term and short-term basis accurately. Projections of cash flow help the business achieve its target in the right way. So, how we prepare the financial budget? Prepare the capital asset budget, the cash budget, and the budget's balance sheets. The capital asset budget represents a significant investment in the cash, and the amount is carried to the cash budget. Therefore, it needs to be prepared before the cash budget. If the cash will not be available, the capital asset budget can be adjusted and again carried to the cash budget. The capital budget, also called the capital expenditure budget, and the company plans to invest in a long-term asset. Next is evaluating the worth of business. There are four main approaches in these evaluations. And first, let me tell you what is evaluating worth of business. Evaluating worth of business is the central strategy implementations. Why? Because integrative, intensive, and diversification strategy often implemented and by acquiring other firms. The first approach is what firm own. This determine the business worth such as net worth and shareholders' equity. And next we go to the second approach, which is what firm earn. This approach is to measure the firm value based on the future benefit of its owner that may derive through the net profit. And next we go to the fourth approach, which is what firm will bring to the market. In this approach, it is to divide the market price of the firm common stock by the annual earning per share and multiply this number by the firm's average net income for the past 5 years. This approach also known as price earning ratio. Next, we go to the fourth approach, which is also be called outstanding share method. In order to use this method, you can simply multiply the number of outstanding share by the market price per share, and that is the evaluation of the worth.
There are two types of budget, which is cash budget and expense budget. Cash budget is an estimation of the cash flows of a business over a specific period of time. This could be for a weekly, monthly, quarterly, or annual budget. This budget is used to assess whether the entity has sufficient cash to continue operating over the given time frame. As for the expense budget, it helps businesses track purchases and limit operating costs to the lowest possible amount. Through careful planning and analysis, managers can coordinate expenditure with tax strategies and cash flows. Basic approaches for evaluating the worth of business. So first, what a firm owns, what a firm earns, and what a firm will bring to the market.
So yeah, that's what we learned on the accounting or financing issues. So I hope you guys have input on the finance and accounting issues. So we move on to the second group, which is on the nature or the role of research and development in strategic implementation. So let's go.
Assalamualaikum warahmatullahi wabarakatuh, and hi to everyone. My name is Muhammad Mukri, and for our group, we'll present our mind map entitled Research and Development Issue. So for my part, I will start with my introduction first. So this is our topic, Research and Development Issue in Strategy Implementation. This is the mind map for research and development issue in strategy implementation. It is divided into 4 parts. So the first part is definition, followed by R&D policies, decision to acquire research and development expertise. Last but not least is 3 major R&D approaches for implementing strategies. So we make complex issues for easy to understand in this mind map. This mind map is also enables for meaningful learning, and also it helps with memorization and also retention. For the definition part, I will explain what is research and development issues. Research and development personnel can play an integral part in strategy implementation. These individuals are generally charged with developing new products and improving all products in a way that will flow effective strategy implementation. For research and development policies, employees and managers perform tasks that include transferring complex technology, adjusting process to local raw materials, adapting process to local markets, and altering products to particular tastes and specifications. Strategies such as product development, market penetration, and related diversification require that new products be successfully developed and that all products be significantly improved. But the level of management support for research and development is often constrained by resource availability. Technological improvements that affect consumer and industrial products and services shorten product life cycles. Companies in virtually every industry are relying on the development of new products and services to fuel profitability and growth. Surveys suggest that the most successful organizations use an R&D strategy that ties external opportunities to internal strength and is linked with objectives. Well-formulated R&D policies match market opportunities with internal capabilities. R&D policies can enhance strategy implementation efforts to: first, emphasize product or process improvement; second, stress basic or applied research; third, be leaders or followers in R&D; fourth, develop robotics or manual type process; fifth, spend a high average or low amount of money on R&D; six, perform R&D within the firm or to contract R&D to outside firms; and the last one is use university researchers or private sector researchers. Decision to acquire R&D expertise. Many firms wrestle with the decision to acquire R&D expertise from external firms or to develop R&D expertise internally. The following guidelines can be used to help make this decision. The first one is, if the rate of technical progress is slow, the rate of market growth is moderate, and there are significant barriers to possible new entrants, then in-house R&D is the preferred solution. The reason is that R&D, if successful, will result in a temporary product or process monopoly then the company can exploit. The second one is, if technology is changing rapidly and the market is growing slowly, then a major effort in R&D may be very risky because it may lead the development of an ultimately obsolete technology or one for which there is no market. The third one is, if technology is changing slowly but the market is growing quickly, there generally is not enough time for in-house development. The prescribed approach is to obtain R&D expertise on an exclusive or non-exclusive basis from an outside firm. The fourth one is, if both technical progress and market growth are fast, research and development expertise should be obtained through acquisition of a well-established firm in industry. So, Raif will continue the next part.
Thank you to Mukri. And now I will continue from what have Mukri explained about strategy implementation 2, which focus on the issue of research and development. Let's get into it. Next is the types of R&D. There are many types of R&D and different strategy that we implemented, but it is depends on the what type of organization. This is because different type of organization have a different strategy for their R&D activity. For example, the pharmaceutical company, the strategy that being implemented is the product development, and their R&D activity is to test the effects of a new drug on different subgroups. For other type of organization, what manufacturer, the strategy that being implemented is the related diversification, and the R&D activity is to test the performance of various skill designs under various conditions. So next example is the plastic container manufacturer, where they use market penetration as the strategy that be implemented, and the R&D activity to develop a biodegradable container. And last example is the electronic company, where they implement the strategy of market development for the R&D activity, which to develop a telecommunication system in a foreign country. Next is the three major approaches for implementing strategies. The first strategy is to be the first firm to market new technological products. This is a glamorous and exciting strategy, but also a dangerous one. This is because firms such as 3M and General Electric have been successful with this approach, but many other pioneering firms have fallen, with rival firms seizing the initiative. The next one is the second R&D approach, which is to be an innovative imitator of successful products, hence minimize risk and cost startup. This approach entails allowing a pioneer firm to develop the first version of the new product and to demonstrate that a market exists. Then, laggard firms develop a similar product. This strategy requires excellent R&D personnel and an excellent marketing department. As for the third R&D strategy is to be a low-cost producer by mass producing products similar to but less expensive than products recently introduced. As a new product is accepted by customer, price become increasingly important in the buying decision. Also, mass marketing replaces personal selling as the dominant selling strategy. This research and development strategy requires substantial investment in plant and equipment but fewer expenditures in R&D than the two approaches described previously. As a conclusion, strategy implementation depends on cooperation among all functional and managers in an organization. R&D managers have to transfer complex technologies or develop new to successfully implement strategies. So that's the end of our presentation. So that's all from me. Thank you.
So yeah, thank you very much to my brothers who has explained in details about the research and development in strategic implementations, and also thanks to my friends, the girls who had made the beautiful presentation. So let's move on to the last group, which is the management information system issues. So let's go.
Hi and Assalamualaikum to my beloved lecturer Dr. Dewi. So today, me and my fellow friends will be presenting about the strategic implementation. As for my part, I'll be present about the MSI, Management Information System. Basically, I'll be doing the introduction part, where it contains of the definition of the MSI, as well as how does MSI works in implementing the strategy. So before I go further, let me introduce myself first. My name is Shamim Shahira binti Jusnam, and I'm from Group 1. So MIS, Management Information System, is the department controlling hardware and software systems used for business critical decision making within an enterprise. The MIS department was originally the whole of information technology. From the 1960s to the 1980s, practitioners and business schools referred to MIS rather than IT. In the early days, enterprise computing's main role was to help the CEO and CFO with information systems management for a few key run the business tasks, such as order entry, accounting, and budgeting. No enterprise applications exist. Programmers painstakingly wrote code to carry out these functions, and it is usually on a mainframe. In addition to serving as a department within a company, MIS refers to computer software that is used to store, organize, and as well as analyze information. Management information systems are used to track sales, inventory, equipment, and as well as related business information. So in the past, management information systems run on mainframe computers. As computing systems evolve, MIS moved to run out client or server systems, and today it is common for MIS to run in the cloud or in a hybrid cloud. So, in order to clarify this confusion, therefore, the process sometimes will be labeled as IS development and deployment process. MIS implementation, however, is high priced with costly assets, and thus this implementation project requires detailed planning of its design, implementation, and as well as its operation process.
Assalamualaikum, my name is Nur Qaida Shahira Binti Rosti. So today I will continue about role of MIS. A management information system plays an important role or functions in business organizations. So what are the MIS functions? There are many functions or role of MIS, and some of the important roles can be discussed today. This mind map shows you the functions of MIS. There are 5 functions of MIS. The first functions of MIS is that information collections, retrieval and storage. Next, coordinations among the department. Management information systems satisfy multiple needs of organizations across the different functional departments. Thirdly is finding out the problems. As we know that MIS provides relevant information about every aspect of the activities. Hence, if any mistake is made by the management, then MIS information will help in finding out the solutions to that problem. Fourthly, comparisons of business performance. MIS store all past data and information in its database. That is why the management information system is very useful to compare business organizations' performance. Last but not least, strategies for an organization. Today, each business is running in a competitive market, and MIS supports the organizations to involve appropriate strategies for the business to ascend a competitive environment. To sum up everything that has been stated so far, business entities exist to make profits. Not-for-profit organizations exist to deliver quality service or products cost-effectively. Regardless the types of organizations, MIS has a major role to play in achieving the objectives. MIS enable organizations to make sound decisions by providing decision makers with the information. So that's all from us. Thank you.
So guys, as we know that the function of MIS, we have seen that in many firms, the usage of MIS in the working place has become more and more engaging because information technology is allowing the employees to work at home or anywhere at any time, and the mobile concept of work allow the employees to work from the traditional 9 to 5 work days across to any time of the day, which is the 24/7 in around the globe. So like desktop video conferencings allow employees to beam in whenever they need it. So like any managers or the employees who travels a lot away from the office will be a good candidate to work from home. So but handling this MIS will also occur to another issues like for the mobile tracking of employees, like the use of mobile devices or inexpensive monitoring software and now enable the companies to know where the employees are or even eavesdrop on their phone call or what are other things they do. So more than 50% of business that send employees out on service calls will have to track their location and movements of those employees by their company because of the self-handed devices that has been given from the company to the employees. So some employees complain that various monitoring practices is like an invasions of privacies, but business contend that such measures will improve the workplace safety and productivity. It also will reduce staff on protecting against discriminations. So like there are two sides of the coins here. The employees are expected that these issues will lead to invasion of privacies, but from the employer's side of views, we know that this will enhance the workplace safety and productivity. So like there are also other things like mobile apps for customers. So like from mobile apps of customer, companies will increasingly develop all mobile apps so that the customer can use, and it will result to many data that we can find from the mobile apps. So it will helps the company implement most effective strategies to overcome or to satisfy their customer needs by the mobile apps for the customer. So basically, these two are the types of we can see in the management information systems. So yeah, I think that's all for me. We will be moving on to the examples or examples of business that integrate the MIS. Let's go. Thank you guys.
Assalamualaikum Doctor, my name is Rashmi Binti Handin. So today I will discuss about the example of business that integrated MIS in their business and what is the application of MIS in that business. Honda is the world's largest producer of the motorcycles and internal combustion engines that are measurable by volume, mainly producing more than 14 million internal combustion engines each year. Managers of Honda have to administer the intricacy of the supply chains, internal control and manufacturing, as well as meeting the customer and distribution demands. In today's business environment, manufacturers are forced to make effective decisions on a regular basis with the limited information system. Honda has to face mounting globalization, increased competition than before, and customers whose needs are reflected in their own facts and opportunity of a global market. Besides maintaining proficient business, Honda has grown its emphasis of the information technology with the rising needs for partnership, connectivity, and speed in the modern economy. Honda has started looking for ways to give authority to their employees so that they can work smartly to compete with their competitors in the current market scenario. Any business without the information technology is failed to deliver competitive edge and is just wasting the potential of their human resources. Honda observed this change and adopt useful hardware and software in their company. Next, there are three applications of MIS in Honda. The first one is help in decision making. MIS aid Honda in collecting valuable information and transform it into rational report, which otherwise will be useless as it is impossible to manage volume of data manually. With the help of this report, Honda can recognize trends and patterns which will be impossible if all the work is done physically. MIS system make use of the raw data to run replication and answer a variety of theoretical questions such as what if concerning modification in strategies. For instance, MIS can tell Honda about the effect of alteration in price on the sales of their cars. Due to the decision support system, Honda can be enabled to make more of the informed decision within the organization, which otherwise would be impossible without MIS. The second one is data collection. Even though MIS help in collecting numerous amount of business information, but they are also useful for providing saving time benefit to the employees in contrast with the past where files are to be handled manually. Now, MIS quickly examines the data after entering it into the computer through data processor, thus enhancing faster decision making in the organization, which is reflected in the efficient working. And lastly, information system. Every day, business require some or the other kind of information system in the organization. The computerized system recording and business process management is vital to run the company at a profit as well as responding to the fluctuation in the market. Management information system, however, are perfect for gathering and reporting information related to the company business process. MIS enable Honda to review the data and make use of the information for achieving the company's objective. That's all from me. Thank you.
So guys, I think that is all about it, about the strategy implementation issues, which is on the finance, R&D, and also the MIS. So if you guys, I hope you guys have input or any knowledge regarding this issue. So without further ado, this video will be ending here. And if you guys have any questions or anything that you wanted to ask, please proceed on the comment section. So don't forget to like, subscribe, and share. Thank you guys.